In today's video, we're going to talk a little bit about a counter trend decision in WYNN. Now, the trend trade setups are still going to be the highest probability setups, but there are times where we are going to watch for possible termination of a move where it's still a relatively low risk setup that could be worth a fair amount of cash. So I have some specific rules that I follow though. I would not look at a counter trend trade unless there is also timing. Now in the case of WYNN, you're definitely looking at a bearish pattern of lower lows and lower highs. You definitely have price way below the 200, below the 50, and the 5 and 13 are in a sell mode. But why would I look for a bounce? Well, I have 1, 2, 3, 4, 5, 6 cycles. Well, pretty much there was one on the 5th, but pretty much the 8th through the 10th for a possible tradable low, right? Why else would I look for that possibility? We'd look for it because many moves tend to terminate at extensions of prior swings, and we definitely met an extension of this prior low to high swing. We definitely made an extension, which means that we're in the position to terminate the decline. And what other reasons? Well, because you had similarity of swings here. Okay, if you compare some of these prior declines here, you're going to see that some of these were similar to this current decline. So how do you work with that? First of all, you have to be pretty nimble if you're going to consider a counter trend trade, because you have to be very quick to get the heck out of the way if it stops moving in your favor. Okay, and here's an example of how you can look at it for day trades. So here's where we traded into this symmetry support yesterday, which was the beginning of this time window for a possible low. And what you can do is you can go down to a very short-term time frame and look for a signal there where it's not a ridiculous amount of risk and you're not going to take it overnight anyway. So where did a signal come in? Well, it tested support and timing. It had the moving average crossover. I like to use the 834 EMA crossover with the lower time frame charts, and it also took out a prior swing high. So if you enter here, and actually it did pull back to that same area a little bit later, you can also look at a secondary pullback for an entry. But here's the original trigger, and then your stop can be placed right underneath this low. So it's not a ridiculous amount of risk. Now what can you expect to get out of it? Well, typically at a minimum you're going to look for maybe a swing that could be similar to some of these prior rally swings before it rolled over in the past. So I've run, I started running the projections of these prior swings. So 123, 124 area, or anywhere from 126 to 131. Now, if you're lucky enough to start with a counter trend trade and then you also clear symmetry, then you could see a much bigger move, a much deeper upside correction. So, the risk is not ridiculous, and you want to make sure that you're pretty nimble, so you need to be prepared to get out. So it's not for everybody, but there are parameters that you can use where it's not a ridiculous amount of risk.